Talk Media Limited, where complex ideas are explained clearly. Hi, I'm TaxMax. Let's break down today's tax topic.
Fact: companies often pay higher stamp duty land tax rates than individuals. Stamp duty land tax, usually called SDLT, is a tax charged on land and property transactions in England and Northern Ireland. Companies are subject to SDLT under the same legal framework as individuals, but with important differences in how the rules apply. Those differences exist because companies can be used to hold property as investment vehicles, development structures, or avoidance structures. As a result, the SDLT rules deliberately impose additional charges and higher rates in certain corporate situations. From the outset, it is important to understand that SDLT for companies is not simply the same rules with a company name added on top. SDLT applies when a company acquires an interest in land. This includes buying freehold property, taking the assignment of a lease, or being granted a new lease. The charge is based on the consideration given for the transaction. That consideration does not have to be cash. It can include the assumption of debt, the exchange of property, or other forms of value. One of the most important distinctions in SDLT is whether property is residential, non-residential, or mixed use. Residential property generally includes buildings used or suitable for use as dwellings, together with land forming part of the garden or grounds. Non-residential property includes commercial buildings, agricultural land, offices, shops, and industrial property. Mixed-use property includes both residential and non-residential elements, such as a shop with a flat above it. This classification matters because different SDLT rates apply. Companies pay SDLT using the same basic rate structure as individuals, but with important additions. For non-residential and mixed-use property, non-residential SDLT rates apply. For residential property, companies are subject to residential SDLT rates, often increased by surcharges. Rates apply on a slice basis, meaning different portions of the price are taxed at different rates. As at September 2025, companies acquiring residential property are automatically subject to the higher rates for additional dwellings. This involves a 3% surcharge on top of the standard residential SDLT rates. There is no need to test whether the company already owns another dwelling. The surcharge applies by default to corporate buyers. Companies may also be subject to the non-resident surcharge. As at September 2025, a 2% surcharge can apply where a company is treated as non-UK resident for SDLT purposes. These surcharges can stack. That means a single transaction can be subject to standard residential rates, plus the 3% higher rate, plus the 2% non-resident surcharge. A special rule applies where a company acquires residential property costing more than £500,000. In these cases, a flat SDLT rate of 17% can apply. This is designed as an anti-avoidance measure targeting high-value residential property held in corporate structures. However, important reliefs can disapply the 17% rate. These include acquisitions for property rental businesses, development and resale, and other qualifying commercial purposes. Where relief applies, the transaction falls back into the normal residential SDLT regime instead of the flat rate. Reliefs must be actively claimed and conditions must be met. If conditions are breached after completion, SDLT relief can be clawed back. Where a company acquires a lease, SDLT is not based solely on any upfront premium. It can also be charged on the net present value of the rent payable over the lease term. This means lease length and rent structure can significantly affect SDLT liabilities. SDLT also includes linked transactions rules. If multiple transactions are linked, they are treated as a single transaction for SDLT purposes. This can push consideration into higher rate bands or trigger the 17% flat rate threshold. SDLT rules can change over time. Where contracts were exchanged before a rate change, but completion takes place afterwards, transitional rules may apply. These rules look at the timing of exchange, substantial performance, and contract variations. In summary, SDLT for companies is often more complex and more expensive than for individuals. Companies are automatically subject to higher residential rates. Surcharges can stack. The 17% flat rate can apply to high-value acquisitions. Reliefs exist but must be monitored. Leases use net present value calculations, and linked transactions can significantly increase SDLT. And this brings us back to the fact we opened with. Companies often do pay higher stamp duty land tax than individuals. That is deliberate. The rules are designed to discourage the use of corporate structures purely to reduce SDLT, while still allowing relief where property is held for genuine commercial purposes. I bought a house through a company once. The stamp duty invoice needed its own mortgage.
Educational content only, not advice. Rules can change. Thanks for watching. Clear explanations, one place, Talk Media.